Welcome back to Conversations. I just want to make a short video today. I've been thinking a lot about the economy lately. I made a big mistake back in October this year when we had a flash crash. I took my money out of the my 401k out of the stock market and sitting in cash. Not cash, but in the money market earning 5%. And the stock market has gone up a lot since then. That was a mistake. I was expecting the big one. I'm sort of fearful of the big one. And now I have been thinking about jumping back into the market. Stock market have been booming lately since October. And the past, say, 2 months, S&P 500 gone up to 6,000 one time. The prediction now is could get to 6,500, and JP Morgan Chase say could get up to 8,000 before. That is prediction. But we never know when the market's going to crash. I think the bubble is huge right now. Things are so expensive right now. When you're buying at the top, but it's always at the top until the next bubble, until it gets higher and higher. This is Harry Dent. I don't know you're familiar with him. I listen to him sometime. He has a negative views on a lot of things. I don't really subscribe to everything he say, but it's good to listen to both sides, the bullish and the bear. He's a bear, but just because you're a bear is not bad. It's good to be fearful. Remember, only the what's the term they say? Only the paranoid survive. Only the paranoid survive. That is the phrase I'm trying to say. So let's listen to Harry Dent on what he has to say.
Look at reality, look at the charts and see how much. Again, I'm just talking about housing going back to 2012. That's 62% crash in housing, which would be twice as bad as the 2008 crisis, and that was bad on most people. Stocks, just going back to 2009, that's 89% on the S&P 500 and 94% on the Nasdaq. That's a total wipeout. That's 1929 to 32. You've got to at least acknowledge that this is a possibility. I've had a strange path for most economists. And number one, I didn't get my PhD in economics because I started to major in economics and found it was too boring and vague and conceptual. So I took everything else in business, accounting and finance in undergrad. Then I went to Harvard Business School and studied more marketing and business strategy, which was my true love. But I can tell you one thing, bubbles never, ever end well. There's no way to go from extreme bubble and have a soft landing. Now, that's what seems to be happening right now, and we'll see. But I tell people, give 2025. I think the truth will be told next year whether they can let down this bubble without causing a crash, because I can tell you, never happened in history. And I can't even compare past bubbles to this bubble, given how global and pervasive it is. I mean, obviously, he's seen as pro-business, and yes, tax cuts, everybody likes tax cuts, but we already have the biggest runaway 16-year streak of deficits. We have not seen a balanced budget since 2001 or something like that. It's just crazy. And that never ends well either. So I think what's going to kind of happen is Trump's coming in, one of his platforms also, hey, cutting government spending, excess government spending. And Elon Musk says he's going to put me in charge of this, and you better look out if I do. And I think that's the big risk here, that Trump may be seeming to what seems to be a good thing to get the economy. But yes, we have been running nonstop deficits. We have brought inflation down, but it's hard to get down more. And so, okay, we'll cut government spending. But if he cuts government spending, I'd say that's going to start a slowdown that will build on itself. I know the best remedy for the economy. It's called a recession or even a depression at times. This will wash out. A lot of bad debts will fail. That's what happens in recession. It's healthy to borrow and for companies to invest equity capital as well in growth in a boom. But the recessions come along, or occasionally a depression after a bubble boom, and this is a bubble boom, so that's when you see depressions in history. It cleans out the bad debts and keeps the good ones and consolidates the bad companies and the good companies. It's very healthy for the economy. But the problem is now we can't go into a healthy boom with the highest debt ratios across all four sectors and globally in history. So I think the next few years is likely to be ugly. The question mark is, when does the darn thing start? I mean, because the governments are fighting this hand and tooth. And I know that the Federal Reserve knows better than me. I mean, why did they not let the economy take a break during COVID? Because they know they've been stimulating it for 15 years, which means they know how weak it is. I think the central banks know this better than anybody. They just can't say it because they don't want to scare anybody.
I just want to share that short video from Harry Dent. He's a bearish. I listened to a lot of bull and some bear as well. I had to listen to both sides. Right now, I'm determined whether to get back into the stock market or not. Like I said back in October, a few months ago, when we have a flash crash, I made mistakes of taking my money out. Now I'm thinking about putting my money back into the market. Uh, right now, the S&P 500 is close to 6,000. It was at 6,000. It's dropped. Now it's going to go back again. Um, now the world the word on the street is that the S&P 500 can get to 6,500. J.P. Morgan Chase say that the S&P 500 can get to 8,000, which is hard to believe. The bubble is huge right now. Is it going to crash any day now? Who knows? But I don't believe that the government will let the market correct itself and crash. They won't let the market crash. If the market starts to tank, the government will print out money and buy the stocks to keep the market up. We done that during COVID era a few years ago. It's called quantitative easing, QE, QE1, QE2, QE3. Now we gonna have QE4, 5, 6, 7, all the way up to 10, and we gonna keep on printing money and buy the stock to keep the market up so the market won't crash. Meanwhile, your money and my money is worthless. That's why we can't pay our bills now. It doesn't matter how much money you make. It does, but most Americans can't afford to live without going to debts on their credit cards. But anyway, I am not a financial advisor by any means. Please don't take anything I say as financial ad- advice. So, with that, I just want to share this short video of my journey on studying the market and whether I should get back to the market or not. It's good to be safe, stay out of the market, but then I will lose money due to inflation. So, how long should I stay out, or when should I get back in? So, that is what I'm struggling with right now. Anyway, thanks for watching, and I'll see you on next time.